Good afternoon, Africa. Welcome to African Economy, your daily look at the trends shaping business and finance across the continent. It is the second day of the week, of course, and as markets adjust to fresh data and new policy signals, we bring you up to date the stories behind the numbers, from currency movements to corporate performance and government reforms. I am Wangfonabasi Walter, and it's always a pleasure to have you join us. In the highlight, South Africa gold output accelerates decline in August. Nigeria tops African migration to Canada in first half of 2025. Africa's copper powerhouses poised for revenue gains as prices hit 17-month high. Ethiopian coffee export earned more than $500 million in just 2 months. And to begin, let's now turn to how the US dollar is performing across African market. The US dollars against Nigerian naira exchange rate is at 1,463 naira 35 kobo, indicating that the US dollar is rising against the Nigerian naira at 2.480, and that is a percentage of 0.17. The US dollars against South African rand is at 17 rand, which shows that the US dollars is rising against the South African rand at 0.1497. The US dollars against Zambian kwacha is at 22 kwacha, which shows that the US dollar is falling against the Zambian kwacha at 0.1610. The US dollars against the Egyptian pound is at 47 pound, indicating that the US dollars is rising against the Egyptian pound at 0.0100, and that is a percentage of 0.02. The US dollars against the Algerian dinar is at 130 dinar, which shows that the US dollars is rising against the Angolan and Algerian dinar, beg your pardon, at 0.101. US dollars against Angolan kwanza is at 923 kwanza, indicating that the US dollars is rising against the Angolan kwanza at 5.269, and that is a percentage of 0.57. In the first half of 2025, Nigeria firmly led African migration to Canada, with 6,831 Nigerian-born individuals becoming Canadian citizens, the highest by a wide margin. North African nations, including Morocco, Algeria and Tunisia, followed individually, accounting for more than 5% of all new citizens of African origin, driven by Canada's growing appeal to French-speaking migrants. The presence of countries such as Eritrea, Ethiopia and Democratic Republic of Congo highlights how economic aspirations and humanitarian pathways continue to shape migration trends from East and Central Africa. Meanwhile, South Africa's smaller share reflects more selective immigration patterns among its professionals. And while people are moving abroad in search of opportunity at home, Nigeria continues to battle with another kind of movement, this time in its rising debt numbers. Newly released figures from the Debt Management Office (DMO) showed that Nigeria's total public debt climbed to $99.7 billion as of June 2025, up from $91.3 billion a year earlier. The increase marks a return to growth in dollar terms after a volatile 2024 shaped by steep currency depreciation. While the naira value of debts continued to rise sharply, the modest rebound in dollar terms suggests renewed external borrowing and ongoing fiscal adjustment. Now, speaking of economic performance over time, let's look back at how Nigeria's growth story has evolved since the return to democracy. After the return to democracy in 1999, Nigeria's economy experienced a brief surge, peaking at 14.6% 5% in 2002 before settling into a moderate growth through the 2000s. According to reports, the momentum slowed after the 2014 oil crash, with growth turning negative in 2016 at 1.6% and 2020 at 1.8%. In recent years, the economy has stabilized, averaging about 3.3% annual growth since 2021, reflecting a slower, more fragile post-pandemic recovery. And this national growth status, attention is shifting to how well individual states are managing their finances and driving local economies. With the recent release of the 2024 Internally Generated Revenue (IGR) report by National Bureau of Statistics (NBS, we take a look at how state-level revenue generation has evolved over the past decade. Between 2014 and 2024, according to the chart, the total IGR of Nigeria state grew remarkably from 707 billion naira to 3.63 trillion naira, a significant 413.27% increase. Now, this surge highlights steady improvement in state-level fiscal capacity and revenue mobilization across the country. Lagos State remained the dominant contributor, recording an IGR of 1.26 trillion naira in 2024, which represents about 34% of the total IGR, followed by Rivers State with 317 billion naira. Over the 11-year period, most states recorded consistent year-on-year growth in IGR except in 2015, 2020 and 2022, when overall collections dipped slightly compared to the preceding years, likely reflecting broader economic slowdowns during those periods. Across the period, pay-as-you-earn, PAYE, remained the major source of revenue for most states, highlighting how formal employment and taxation continue to boost state revenue growth. In the private sector, one financial institution continues to demonstrate just how much Nigeria drives corporate profit across Africa. Guaranty Trust Holding Company (PLC) first half of this year's performance highlights Nigeria's as undisputed profits hub, accounting for nearly 3/4 of group earnings. Ghana and Cote d'Ivoire provided meaningful regional support with 61.9 billion naira and 28.2 billion naira respectively, showing strong market traction. In contrast, smaller subsidiaries such as Tanzania and Uganda delivered minimal returns, underscoring the uneven profit distribution across GTCO's African operations. Overall, the bank's 473 billion naira profit in the first half of 2025 reflects its strong reliance on Nigeria, with select West African markets showing promise for diversification. We shift our focus to another pressing concern impeding Nigeria's investments, where Aliko Dangote, Africa's richest man and chairman of the Dangote Group, has addressed concerns about his perceived monopoly, emphasizing its potential harmful impact on foreign investment in Nigeria. Speaking at the inaugural annual Downstream Petroleum Week, put up by the House of Representatives Committee on Petroleum Resources Downstream, where he was represented by the Group Chief Strategy Officer at Dangote Industries Limited, Aliyu Suleiman, he urged that such perceptions should be dismissed to foster industrial growth within Nigeria, particularly in the energy sector. Dangote encouraged local investment in refining activities, stating that Nigeria possesses a natural competitive advantage due to its proximity to oil and gas supplies. He highlighted the capabilities of the Dangote oil refinery, explaining its potential to satisfy Nigeria's energy needs and support export demands. We'll go on a break, and when we return, we'll take you through what's trending at the southern part of Africa. Stay tuned. We will be right back. Thank you so much for staying with us. Still African Economy, and I am still your host, Wang Fonabasi Water. And now to the rest of the stories. Gold production in South Africa fell to 3.6% year-on-year in August 2025, marking the second consecutive monthly decline in accelerating from a 0.4% drop in the previous month. The contraction shaved 0.4 percentage point of overall year-on-year growth in total mining output. On a seasonally adjusted basis, gold production also declined by 3.6% in August, following a 0.9% fall in July. Still in South Africa, mining production in South Africa fell by 0.2% over the year ago in August 2025, following a 5.1% advance in the prior month and defying market's estimate of a 1% rise. This marked the first decline in mining activity since April, largely on account of product gross margin of 3%, contributing 0.9 percentage point. Gold at 3.6%, contributing 0.4 percentage point, and manganese ore at 3.4%, contributing 0.3 percentage point. Conversely, the biggest increases were seen for diamonds at 29.6%, other metallic minerals at 19.1%, and coal at 4.1%. On a seasonally adjusted monthly basis, mining output decreased by 1.2% in August after an upwardly revised 1.2% rise in the previous month. Seasonally adjusted mining production increased by 3.3% in the 3 months ended August 2025 compared with the previous 3 months. As global copper prices surged to a 17-month high, Africa's two leading producers, the Democratic Republic of the Congo and Zambia, are uniquely positioned to reap substantial revenue gains. Zambia's revenue from copper, contributing 70% of its export earnings, could stabilize its currency and support debt management. The DRC may attract foreign investment into its key mining regions like Katanga and Kakula, driven by a weaker US dollar, tight global supply, and recent mining disruptions. Copper prices surged by 3.45% yesterday, reaching over $10 per metric ton, the highest level since May 2024. Lastly, on African economy, Ethiopia's coffee industry has made a strong start to the fiscal year, exporting 80,000 metric tons of coffee in 2 months. That has brought in $546 million. Last fiscal year, the country exported 470,000 tons of coffee worth $2.2 billion. According to the Ethiopian Coffee and Tea Authority, supply chain reforms are behind the surge in export, allowing producers to sell directly to international buyers. Other factors include new washing and grading centers that are improving quality. Government inspections procedures have also been decentralized and moved closer to coffee farms. Ethiopia is now aiming to increase its coffee export to 600,000 tons a year and revenue to $3 billion. And that's where we call it a wrap on today's edition of African Economy. Do well to follow us on all of our social media handles at Spectrum TV Live. Don't forget to African Economy airs live every Tuesday and Thursday at 2:30 p.m. I am Wang Fonabasi Water signing off. Until next time, keep thinking growth, keep thinking progress, because this is where Africa's economy speaks. Goodbye, Africa.